Daily FX breakdown, day one. Thank you very much to those who've shown an interest in this short series. As always, I'll be beginning my outlook with the DXY to gauge an understanding of the dollar situation, and then move on to GBP USD, GBP JPY, so a yen pair this time, and then euro dollar. So let's begin with the DXY as anticipated. From the daily chart, we can see that this area of demand was then respected, tapped into the 50% and moved on to the new area of daily supply at 93,200. What that means is that we've now retested this zone once again, made a lower high and then briefly pierced through that level of daily supply. However, due to the fact that we then had a massive sell-off to the downside, I then annotated over here that this might have just been an induction or a manipulation to catch the buy stop orders and then sell off lower. Therefore, the bearish bias is overall what I am looking at for the moment. So if we go down to the 4 hourly, then the lower time frame shows that we've made a clear and gradual push to the downside towards the H4 order block. So an order block is the last candle down before a move up, or the last candle up before a move down. Let me try and represent this graphically. Okay, so this is an order block to the downside, so let's make this red. Okay, for example, we've got price action coming up from here. Okay, it then creates this candle and then it sells off very strongly. Okay, so we can say that this candle over here, the blue one, represents our order block. We then usually would take the 50% of that, okay, and try and see if we can get an entry off of it. Okay, but besides the point, we then look at the 4 hourly rejection off of that 50% of the order block. However, due to the fact that we've now almost created a fake out at the 93,700 and engaged in a downtrend, we can perhaps expect the daily to see some further move to the downside and also confirm the data that came out on Friday regarding NFP, so non-farm payroll, every first Friday of each new month. And this time around, the US economy added 235,000 jobs in August of 2021, which is the lowest figure in 7 months and well below the forecast of 750,000. So almost a 500,000 discrepancy there. This was due mainly to a surge in COVID-19, and I'm reading at this point, infections, which may have discouraged companies from hiring and workers from actively looking for a job. So somewhat of a risk on sentiment, which might have caused lower figures in the employment and therefore a negative stance in the DXY. The situation in the dollar index can then position, or has positioned, the GBP USD somewhat stronger, especially of late. So as you can see from the daily demand, we've respected this order block at the 50% level. So if I draw a zone over here, as you can see, we tapped into it and pushed higher. However, what I wanted to focus on is the fact that we then created a high, retested it. However, we did not make a lower low, so we did not do the usual downtrend sort of approach. Instead, we created equal lows, and when equal lows or equal highs are present, then we can also consider them as liquidity areas. So for example, let me show this graphically. Okay, we're coming from the downside, we've got something that looks like that. Okay, so we have in this zone, we've got equal highs. Okay, so we have equal highs and equal lows. As far as I understand this concept, the concept of equal highs and equal lows can be explained by the fact that some retail traders who focus on breakouts may have their orders placed over here, so at the top of that zone. Equally, people who believe that price might go down might place some sell stop orders to the downside on the break of that, we can call it channel or flag or range, which then in turn creates a lot of money sitting at either direction. So the only way for price to sort of gather enough liquidity to push higher in this case is to manipulate it lower, tap into the demand, continue higher, because otherwise the institutional market participants will not have enough liquidity for them to execute the move or the leg of price action that they wish to execute, and therefore they need the retail liquidity in order to materialize. On the 4 hourly, what I've written down is that I've identified 3 daily supply areas. However, the one that I'm the most interested in is the one up here, the 140, 250. The reason why that is because this most recent one, daily supply, has already been violated, okay? So the supply failed, and therefore we may have more room higher. The reason why it failed is because, nevertheless, we're still in an upwards trend. And if we go back to the daily, we can see that each time we were moving lower, I'll show this with red to signal lower lows, okay? We were respecting the structure of a typical downtrend, so lower lows formed, but over here we failed to make a lower low, okay? So the trend almost stopped, and therefore we're reversing to the upside. In fact, over here we created somewhat of a double bottom as opposed to a low which is lower than the previous one, okay? So the 4 hourly is then clearly engaging in an upward move. Go down to the 1 hour. You can see that in order for me to consider this supply as the next level of resistance, I want to see some sort of price action around the 1 hourly demand, because on the 15 minutes, if we can see, what I wrote down is it is difficult to sustain such momentum, a pullback is likely. So once we've broken the structure, so BOS stands for break of structure, we've created an imbalance, which is an area whereby price goes from point A straight to point B, but without leaving any wicks in the zone, okay? So it just goes straight higher. It creates an imbalance whereby price hasn't been fair. So I want to see price retracing lower here, ideally into the order block that was found in the 15 minute, and then push to the upside to then finally tap into the 139, 500, 140 and so on. But the reason why I'm also expecting price to perhaps move even further to the upside is because this supply has already been tapped, has already been mitigated. So what I mean by that is that here an imbalance was created, which is the concept I've just gone through. We've got a correction, tap into the previous day demand zone, and then a move into here. So we've already come back here. We've already been here. Let me show it with gray. We've already been up here. So there's no reason why price won't create a rejection or a reaction. Of course, we might see that because nevertheless we have created a strong move lower, so it's only fair that price respects that level of supply. But what I'm saying is that we may not see this zone create a break of 136, okay? It's just not strong enough. So the next daily supply I'm interested in is 141, 250. So that's my view of the GBP USD. So bullish momentum to the upside. I'd like this first daily supply zone to be broken to then ultimately, maybe in a couple weeks or months time, reach the long-term target at 142,500. Okay, second pair, GBP JPY, so pound yen. It's important to see how we finally pierced through that 2 previous weeks high. So the 152,200 was violated, albeit very briefly and shortly. However, this means we're no longer into this or within this inside bar range. So we've broken to the upside, and due to the fact that we've seen a recent move to the upside in GBP USD, this also translated into GBP JPY due to the fact that the Great British Pound is present in both crosses. So go down to the daily. I'd like to share with you what I am looking at. And what I've got my eyes on is the fact that we've now created here an order block, which is a daily demand zone. So remember, it's the last candle down before a strong move up. And for it to constitute a strong move up, I'd like it for it to break structure, come back, create some equal lows, and what equal lows mean is that there is liquidity sitting below, therefore we need a manipulation to tap into the order block and then proceed higher, as I showed earlier, and sort of engage and move to the upside in this case, okay, because we're still sitting at a demand zone. So demand means price is tapping into it and then pushing higher because of the presence of a lot of buyers, which obviously outweigh the sellers. So after the most recent move up, we've broken that structure and tapped into the 156 level, which is again my long-term target. I'm not sure whether we'll reach it because we're still, you know, if we look at this zone just like that, okay, this sort of square, we can see that we're engaging in a downtrend, okay. However, what's interesting is that a downtrend is constituted by a sequence of low highs and low lows, these red circles. But what happened here is that we did not make a lower low, but we made a higher low. Okay, so the trend might have been stopped after this strong wick to the downside tapped into the order block, pushed higher, respected the downtrend line or the bearish trend line, and we're now engaging in an upward move. So price is now making high highs and high lows, as we've discussed, and I'm identifying two areas of interest. This one over here, yes, we've made or we've seen a rejection or a reaction off of the middle of the order block. However, the trend is very strong for it to just stop, so it might continue higher into the 153. Therefore, I've placed a nullet, so GJ crossing that area, which is the base of the daily supply, because at that point we might see some reaction and some short opportunities might be there as well. However, because of this strong move, I also think, similarly to GBP USD, that is not very sustainable, okay? So we might want to see a reaction at that zone, which is the 1 hour demand or order block, which I'm going to show now. And for it to be classified as an important zone of demand, let's repeat the process. Break of structure. We then also have some other important factors. So impulsive break. Okay. We then also have a double top. We tried to mitigate this zone. However, let's not forget that here we had NFP numbers. Okay, so a lot of volatility might have been caused by that. I'd like it to then come back lower, create some equal lows and equal highs, manipulation, continuation higher into the 1 hour supply. And since we're on the 1 hour, let's take a look at how I've identified that zone, okay? So it's the last up candle, or last couple candles before the strong move up that broke structure as well, okay? So that goes to show the fractal templates aren't really working, so never mind. Let's go up to the 4 hourly, and overall that's the picture that I'm looking at. I'm looking for a retracement possibly over here on the 1 hour demand. I've set an alert so I'll get notified if we get there. Push into this order block to break the 1 hour supply and then see some interesting rejection at the daily supply at 153. Okay, the last pair that I wanted to go through is euro dollar. So we can see from the daily chart, we've finally broken out of this descending channel or structure. We've then created high highs and high lows. The next zones of interest for me, at least, will be the daily supply at the 195 roughly, and then the daily supply over here. An interesting part or section of this price action that I wanted to draw your attention on is this daily imbalance over here, as you can see. And the reason why I've drawn it there is because from this point, so from this high to this low, this zone of the daily imbalance, price just shot down without retracing or without making any spikes. So price is not balanced over here, is not fair. Therefore, I'm expecting a mitigation into this zone, which could happen either at the 50, so either over here, this market, or at the base, or at the 50% of the order block, or at the top of the order blocks, depending on the momentum, okay? And there's a lot of factors that cannot be predicted just yet, due to the fact that we're still quite far away from it. We are talking about a 200 pip difference, which doesn't happen overnight. Okay, on the 4 hourly then, the reason why, so initially I had somewhat of a demand zone over here because again, the rules were there. So we've got the last candle before the strong move down that broke the structure and so forth. However, we've already been there. We've already tried to mitigate it and not much of a response was there. So it's not like we've tapped it and then broke down. That's because that level of supply wasn't really valid anymore, and therefore we're now continuing higher with the same momentum. So the bullish bias is still there, and the daily supply that I talked about earlier is my next area of interest. However, on the 1 hourly, we can identify this level of demand. And again, I'd like this to still follow the rules that I try to focus on. So we've got a break of structure, an impulsive break. I now want to see somewhat of a slower correction, okay, to then create equal lows, so liquidity, okay, mitigation or manipulation lower in order to tap into this order block, continuation higher, and off we go. Okay guys, so that was going to be it from me. See you tomorrow and have a good day.